Right now, in the 2022 stock market crash, weak companies are being punished for having poor financials and poor business outlooks. Unfortunately, not everybody's immune to losing money in the stock market, and today I'll be sharing 3 stocks that I regret buying and that I dislike that I actually own in my portfolio right now. Unlike many other YouTubers, I believe in transparency and showing the gains and losses, so today we'll be going over the actual stocks that I bought, where I think I messed up, and what I think I'm going to do with this stock in the future and their future outlook. But you want to know what's worse than losing money in the stock market is the fact that 86% of you guys aren't subscribed right now. So help me reach my goal of 1,000 subscribers by subscribing right now, smash the like button while you're at it, join the free Discord link in the description, and of course, roll the intro.
Hello, I like money.
The first stock that I regret buying is stock ticker VFC, VF Corp. VF Corp owns a bunch of clothing brands, for example, North Face and Timberland. Over the last 5 years, they're down 61.5%. Right now, I'm down 53% on VF Corp. Thankfully, I only own 2 shares right now, and I've only lost $73 on the stock, but still, $73 could have been invested elsewhere. Currently, they're trading at a P/E ratio of 14.5, a dividend yield of 7.18%, and they're trading near their 52-week low at $29.34 right now. Right now, VF Corp is a dividend aristocrat, but I don't know if that will be continuing for much longer. Currently, their payout ratio is pretty high compared to free cash flow at 76.34%. Don't get tempted by the dividend yield. This dividend is not as good as it looks. Over the last couple of years, they've had really poor dividend growth. The 1-year growth rate is 2.04%, 3-year growth rate of 1.15%, 5-year growth rate of only 4.42%, and a 10-year growth rate of 10.92%. So it kind of shows that this stock is obviously slowing down right now on growth, and this business is, it's in risk for a dividend cut essentially right now. Right after COVID hit, you guys could see their free cash flow just completely tanked. And right now in this market, investors do not want to see companies that don't have positive profits and free cash flow. Right now, I have not been buying into my VF Corp, even with the dip and their juicy dividend yield. So where do I think I messed up here? To start off, I made one of the earliest investing mistakes that you can make, and one of the most common, which is listening to your family members' recommendations. I blame my dad for this one. He recommended it to me, and he feels pretty bad about it now, to be honest. It was one of the first dividend stocks that I ever bought, and looking back at it, I think I'd rather just put the money into a top-tier brand like Nike with more pricing power in this economic market. I think VF Corp has decent brands, but they don't have the best of the best, and in my portfolio, I want the best of the best. I bought shares at around $60 and $49, so obviously I could have been hit much worse. As for VF Corp's future, I'm not too sure what the future holds. Again, I think their brands are good, but I don't think they're great. I could see a dividend cut potentially coming, and that would cause the stock to just completely tank. I think the stock could be okay, but I am looking to sell out of the stock. I think if the stock ever does go up, it would take a long time, and I'm just not willing to wait, and I'd rather just put that money into a really high quality company instead. Right now, it is one of the smallest positions in my portfolio, so I haven't really gotten beaten up that bad. So if it's only $70 in capital that I use, make sure to join the Discord. I post all my buys and sells there early, so you don't have to wait every month to see my portfolio updates to see if I do sell out of VF Corp, and there's a good chance that I do. But right now, I'm kind of just holding on, seeing if there's ever growth in price, and if anything happens, I will probably sell out. The lesson here is don't invest in okay companies, and don't take advice blindly from a family member or relative. Sorry about that one, Dad. The next one of the worst stocks that I kind of regret buying in my portfolio is 3M. Now, 3M, this is kind of unique because I don't hate the stock in general, and I actually own a lot of it. 3M has been dealing with all sorts of legality issues right now and lawsuits left and right. All these issues for 3M have just completely reflected on the stock price. It's down 51% in the last 5 years, 10% in the last 6 months, 30% in the last year, and is currently trading at a P/E ratio of 12. Now let's look at 3M's dividend. Right now they're trading at a pretty juicy yield of 4.95%. They have a pretty sustainable payout ratio of 58.74%, but the 5-year growth rate is what kind of concerns me here at 4.86%, and they have been growing this dividend for over 60 years, so very impressive dividend stats from their 3M, besides the lack of growth, which is a concern for me. I mentioned that 3M's dividend growth was concerning, and it is for sure. Right now, their 1-year growth rate is 0.68%, 3-year growth rate of 1.14%, and 5-year growth rate of 4.86%. So obviously recently 3M's dividend is kind of a telling tale. Keep in mind 3M is still paying out a lot in dividends right now. and their payout ratio is pretty sustainable, I think at 58%. But again, it is kind of a telling tale that they aren't increasing it, that these lawsuits are very serious. 3M is also spinning off a segment of their business sometime this year or next year. Right now on my 3M position, I'm down 23%, and I've lost $251 on the stock right now. This is because I was actually adding to 3M a lot earlier this year and the year before. Right now, the thing that really alarms me for 3M right now is these lawsuits. I think if they get past these lawsuits, I think they are still a solid holding for the long term. But this lack of dividend growth really is concerning. I don't think that their dividend will be cut. I think there's a chance for a reduction, possibly the spinoff. Right now, I own roughly $700 worth of 3M stock, and I have not been adding to it recently. I recently turned off dividend reinvestment for it, but I think if they get past these lawsuits, they can still be a solid holding long term. Right now, I'm just holding on to my 3M position. I think that over the long term, the stock will go up again. I'm not adding to it, and I'm not selling at the moment. I've turned off dividend reinvestment for the time being just because of the lack of dividend growth and the fact that I don't want to add to it anymore. And I am getting a sizable amount in income for them, so I can use that capital elsewhere. The lesson from this stock, I think, was that past returns don't guarantee future returns. I thought just 3M would just be some strong company over the long term that would be a great holding, and I think that they still can be, but definitely there is no guarantees in the stock market. The next stock on the list is Intel, stock ticker INTC. Over the last year, Intel's been getting beat up, down 43% over the last 1 year. They're making massive capital expenditures right now, trying to compete with the other semiconductor stocks. Right now, Intel is in an uphill race. I bought this stock about a year ago at $55, which is kind of crazy. Right now, they're trading at a PE ratio of 15, a dividend yield of 5%, and over the last year have just been getting killed on their poor financial performance. Their dividend's okay. Right now, they're trading at a 5% dividend yield. Payout ratio of 50%, so it's sustainable for the time being, and a 5-year CAGR of 6.26%, which is okay. Now, Intel's dividend will not be growing for a while. As I mentioned, they're making massive reinvestments back into their business, which they need to be honest. They need to do that to stay alive and stay competing with the other semiconductor stocks. 1-year growth rate of 5.10%, which is alright. 3-year growth rate of 5%, 5-year growth rate of 6.26%, and a 10-year growth rate of 5.3%. So not the best dividend growth from Intel. You can see Intel had pretty good free cash flow, up leading to this massive capital expenditure plan that they announced basically last year. I'm not going to bash them too much on this because obviously with the capital expenditures, you're not going to have a ton of free cash flow. So obviously you will not be seeing much dividend growth for the time being. With Intel, I think this has to be a long-term play if you want to make any money on it, and I'm going to be just holding it for now. So what do I think about Intel stock? Right now I'm holding on to it. If I had a lot of capital, I might consider buying more just to get my cost per share down. I don't know how it could possibly go any lower, but I've said that with other stocks and they've gone lower. I think as the world gets more tech-based and everything becomes technology-based, in the next 10, 20, 30 years, Intel and semiconductor stocks are going to have a big part to do with that, and they're going to, as a result, their business is going to continue to grow. The issue I think right now with Intel is it's just going to be an uphill battle. I think if they can get past the uphill over the long term, this could be a good stock to own. I like their CEO, Pat Gelsinger. Right now with Intel, I'm just reinvesting dividends and I'm not selling it or I'm not holding. If I were to sell it, the stock price would have to go up a lot. The lesson for this is don't fall for value traps. When I bought Intel, their PE was pretty dirt cheap. I think it's also important not to invest in businesses that are in an uphill battle and uphill race. Right now, Intel doesn't really possess any of the qualities that I'm looking for in any new stocks that I'm buying. They're not much of a monopoly. They don't have crazy free cash flow growth. They don't have amazing pricing power. And they're not much of a compounder. Over the long term, I think that they could become one of these type of companies, but I think the mistake that I made, it was a value trap. I didn't really think about it when I initially started researching the stock. I was really quick to buy, and that's something that I've been working on and improving recently in my investing. To sum it up, don't buy companies that are in an uphill race, and don't fall for value traps. Pay fair prices for great companies. And guys, if you want to take one thing away from the video, there's no such thing as losing, there's only learning. I would not be the investor I am today, and I won't be the investor I will be in 10 years if I didn't have these losing experiences. Obviously, they suck now, but you need to go through them and experience your losses. If you guys are new and appreciate the transparency, it would mean a lot if you could subscribe. I'm trying to get monetized by the end of the year. Join the Discord, link in the description. There's no stupid course or whatever, 100% free if you want to see all my buys, sells, dividends received. Have more discussions with other like-minded investors. You guys already know where to go. Smash like while you're at it, subscribe, become part of the journey, grow with me as an investor over the long term. I've had a blast. Thank you for making it to the end, and of course, make sure to do this, of all things. Do dividend stocks, not drugs. Have a great day.